right, well, great. Thank you all for coming, and I'd like to thank the Financial Health Network for having us here. This is very exciting, and we've got an exciting panel here today. And so what are we here to talk about? Inclusive personalization for financial services. And I went to give a little story. When I told my parents earlier in the week that I was coming here, and they said, what's the talk about? Personalization for financial services. Dead silence. My stepmother then said, wow, that sounds boring. And so all of you in the room, thank you. You are proving my parents wrong, which is a child's dream. But what is inclusive personalization for financial services, and what do we mean by that? Well, we know that wealthier and more affluent banking customers have always had access to personalized financial services. That's come through high-touch, unscalable processes where it's a banker with a customer. That has not really been possible to be brought to broader consumer groups and a broader variety of consumers until recently. Because of new data, because of the power of algorithms, power of machine learning, we can now bring these kinds of personalized services to a much wider variety of people. And what's really wonderful and really exciting is that we've now got the opportunity to take this to the next step, which is actually looking at underserved communities and saying, how can we personalize services? How can we help people and help them to become financially healthier, to engage more with the traditional financial system? And we can use these same tools that really were available only to a very select group that are coming down more and more, and now finally having an impact on everyone. And that's a very exciting and powerful thing, and that's what we're going to talk about. We're going to talk about the opportunities, and we're also going to talk about the risks. And so what I want to do is I want to first introduce my panelists, and then we'll jump right into it. So my first panelist is Robin Nunn. Robin is a partner at Morgan Lewis and leads their banking practice. Robin's practice focuses on counseling companies and meeting compliance obligations in a complex web of regulatory requirements that we all know all too well, including fair lending, privacy, and data security. Robin is an active member of the Consumer Finance Services Group, the Environmental, Social, and Corporate Governance Group, the FinTech Group, and the Digital Assets Initiative, yet decided to spend time with us, so thank you. Our next panelist is Nicole Harper. She's a director of corporate strategy at Jack Henry. Nicole has a passion to empower mission-driven organizations to innovate faster, strategically differentiate, and successfully compete. She leads an industry research analyst team at Jack Henry and is active in the fintech community, including serving on Financial Health Network's member advisory committee. And our final panelist is Jody Baggett, the president of Americas at Personalization. Jody has extensive experience in financial services, driving growth at financial institutions as a partner at McKinsey, holding digital leadership roles at US Bank and Citizens Bank, and currently at Personalization, he helps the company deliver personalized insights, advice, and automated programs to help customers improve their financial well-being. So we're going to start with Jody. I'd like you to talk about the opportunities in data-driven personalization, what's being done, what can be done. And since this is really just the beginning of a revolution, if you can talk about a few use cases, a few examples of institutions that are doing this right, that are on the cutting edge and really making a difference, I'd love to hear more about that. But first, I'd like, just to make it a little more complicated, that your response be in the form of a haiku or a sonnet.
You see how demanding Nick can be? And which I would, of course, politely decline and say, no, I'd rather deliver my response in the form of a rap. No, leave all that aside, because now, Robin and Nicole are getting nervous as well. So, it's an exciting time that we're in today. We just conducted research with about 5,000 customers, and they said that less than a third of customers said their primary bank really understands them, really knows them. And with the advancements in data and analytics, we believe that banks and credit unions can not just know your customers, but can actually deliver personalized insights and advice that can help them better manage their day-to-day banking. This means consuming the transaction data and identifying for customers what they should be aware of at any given point in time, as well as what they should take action on. And so this concept of data-driven personalization, we believe, can allow banks and credit unions to deliver kind of advice at scale, not just to your most profitable customers, but to every customer that needs help, and doing it in a very, very proactive way.
Can you give me an example or two of the type of insights that can be provided?
Sure. So there's some great examples here. So it could be anything from detecting if a customer has a duplicate transaction charge. It could be a fraud or a mistake. Or it may be that we're going to inform customers that they have 2 subscriptions that are coming off a free trial, and they're going to start paying for them next month. Or even more sophisticated, by really understanding customers' cash flow, you can anticipate when they may have a cash flow issue. So let's say they have a cash flow issue based on their patterns 7 to 10 days out. You can proactively then engage and say, you can move money in, you can take out overdraft protection, we have unsecured line. And just think about how much more powerful that is rather than feeing a customer and then having to reverse it after they call in.
And when I think about that, I think of all the data and technology that takes. And larger financial institutions are probably have a significant competitive advantage there. So what can smaller and medium-sized institutions do to gain these insights and to help their customers and help them understand their financial health better? Nicole?
Sure. So we have some research that supports what some of the top innovation and the top challenges, moving into this wild year as we're in this post-recovery period that might have a long tail, right, and some complex macroeconomic conditions. And the leading challenge for community banks and regional banks and credit unions really is around, I guess, 3 pillars. First one being speed of innovation, speed to market, delivering innovation fast enough to compete. So speed is one thing. The second is the fact that just through operational staffing, right? More often than not, smaller FIs do not have a dedicated team or even a dedicated FTE around sourcing fintech innovation, vetting solutions, and embedding that, right? Especially in the context of driving and improving consumer financial health. We also have a challenge and a barrier, and it's really not a technology challenge, it's a people challenge. There's a significant skills gap, so we've learned that attracting and retaining skilled talent is a barrier. So Jack Henry's response to that is really trying to allow FIs to control their own destiny. What we mean by that is giving them the keys to drive innovation fast and work with partners who have the skills, right, to do that. And so we've opened up API docs. So we know a lot of financial health is really best delivered, or assistance is best delivered in kind of a mobile context, because that's where the consumers are, traveling with them. It's like a Fitbit, if you will, right, for their financial lives. So that has been a great help. And some examples of some innovation that happened quicker than perhaps it would have if we were just driving that to our solution roadmap are incremental savings. So while this isn't a commercial, just a couple of examples here. So Plinkit. Plinkit is a kind of a gamified, incremental way to set a goal of a variety. It could be a small financial goal, a large financial goal, and you're building savings incrementally with gamified learning. You're getting paid to learn. And so some significant results out of that. I think Plinkit, since launch, has helped consumers save about $6 million, if not more. Big number, right? Incremental. And other solutions helping consumers engage, especially millennials, young millennials that maybe don't understand the stock market, and how do they start to invest and build wealth, so fractional shares. So the list goes on and on. There's a lot of innovation. So I think our position really is to open up the keys, open up the API docs, really find fintech solutions. And when they're interested in working with Jack Henry, we say go build, and go to jackhenry.dev, build the innovation, and then start to work independently with FIs to move quicker, right, and plug that skills gap that we see.
And before the panel, we were talking about some issues that Jack Henry has been uncovering with staffing and the ability for lenders to maintain employees. And I'm wondering, how much that affects an employee's desire to stay with a bank or stay with an institution really is impacted by the financial health of the customers. And I'm wondering if you have any insights into that, whether or not there's a sort of symbiotic relationship there.
Sure. So I think you're hitting on a really interesting place to meander into, and that's around, let's say, activating culture. I think that one of my favorite quotes was an employee of a card issuer saying, "Yesterday I worked for a credit card company. Today I'm solving the world." So it's a frame of mind, a state of mind, and how you're thinking about things. So I think if we're talking about retaining key talent, help them understand the good in the world that your brand is helping deliver, and their role, the specific role they play in that. That will kind of light a fire within, and everybody wants to feel that they're a part of something bigger than themselves, creating value and improving, real world problems. So I think activating culture is one component of that. And we often see challenges in very important facets of financial services. So you mentioned lending, right? Maybe some high turnover. Collections teams tend to be challenged. That's a difficult role, as well as contact center, right? And those are key touch points, right? In members and customers' financial lives. So I think how we nurture and ensure that those employees and associates are connected to what they're doing and that their role matters.
And thinking of employees and their connections to their customers and trying to do better and wanting to do better, we can kind of move over into the regulatory realm where we're thinking about government agencies have an opportunity to foster innovation. They also have the goal of helping consumers in avoiding negative things. And so, Robin, would you please talk about what regulatory agencies are doing or could be doing to foster the financial innovation or innovation in financial health?
Yeah, definitely. Thanks, Nick. Unfortunately, I would say that the regulatory agencies are sort of in the beginning, early stages of this. I think we heard from Acting Comptroller Sue earlier this week that I think they are beginning to sort of take a look at a number of areas. And while safety and soundness and consumer protection are topics that are sort of front of mind and easily a part of a government regulator's mission, where we're sort of going with the sort of emerging technologies and innovation is sort of uncharted territory. So I think that there's a lot of possibility in this area. But I think that right now the process is sort of taking data and making educated guesses as far as whether a particular product or service will help or harm a consumer. And I think that as we collect more information and more data, and as time goes on, it will become better. And I think that as we all continue to have discussions and conversations like this, and continue this movement, that regulatory agencies will obviously take notice and continue the trend. There's been a lot of discussion right now, if you watch or read the news with respect to buy now, pay later, or modifying Regulation E, or new CRA rules, or maybe you hear junk fees, or any sort of other sort of overdraft fees. I think are very much in the forefront of regulators' minds right now, and I think that there will be a lot of guidance and continued discussion around those topics. I'm not sure if financial health is really where it should be right now. I think that there will be developments as financial institutions continue to push the needle in this area with wonderful programs and innovation that sort of allows consumers to take a look at their debt and their spending and their habits. But right now I think that there's a little bit of ways to go. I think that regulatory agencies have collected a lot of data, and I do think that they are beginning to have discussions around this. I just think it'll be a little bit of time before they've moved beyond the conversation of sort of revolutionizing the future of money and are talking more about consumer good and financial health.
And keeping on the topic of regulation and the dangers of these data, most of my work focuses on everything that can go wrong with what we've all been talking about. And in my work, I'd focus on measuring and mitigating discrimination in algorithms. And so when I see data that is what we would refer to as alternative data, things that are predicting cash flows, what we very frequently see is that that has a discriminatory result when it's used in an underwriting model or a marketing model. And one of the wonderful things about being part of this conference is seeing that there's actually a flip side to it and learning that there are opportunities with this data. And financial institutions can use this data in a positive way. And so what I really want to know coming out of this conference and now having a much more robust idea of the pluses and minuses are how can we harness the power of algorithms for good and try to minimize the risks? And I think Robin, how would you advise clients to try these things, like what Jody and Nicole have been talking about, where there is a risk? I mean, you could end up in a situation, I think, where there's a potential steering claim if things aren't done well. Is there a way, is there an environment that you can set up, a lender can set up, so that they could try these things?
Yeah, well, I would first start by telling them to hire a good lawyer. But after you do that, then I think there's a lot of room. I think there's a lot of guidance and information. I think the regulators have been great about putting FAQs, and now there's blogs and there's posts and there's Twitter, and you can really kind of get a sense of the direction things are going. Hopefully you have up-to-date policies and procedures. Hopefully you're working with folks like Nick and doing a lot of testing and making sure that the training of your employees around this area is up to snuff, and that you have a pretty diverse staff that you're working with that hopefully has been trained on bias and implicit issues that may prevail in areas in the United States that we're less than proud of. I think that the regulators are continuously exploring the impact of this innovation on consumers, especially underserved communities. And I think it's really going to take all of us sort of taking a look at, what we're doing ourselves in our particular banks. I worked in-house at 2 financial institutions, and we always found that, garbage in, garbage out, right? You really have to be mindful of the steps that you're taking and whether it, makes sense, and whether it is, if you're just sort of mailing it in and rushing through the process, or if you're really being thoughtful and taking a close look at the data you're using. We now have a lot of data at our fingertips. It's, sort of all around us, but we also have, pretty high expectations to make sure that we're not cutting any groups or marginalizing anyone from the process. This country has a very complicated history of discrimination, and regulators have been very, very good about making sure that the objectives and values of equal opportunity and fairness are something that is really highlighted throughout all of their discussions and all of their examinations. So if you think for some reason that you're not subject to, say, the OCC, who spoke earlier this week, you're probably subject to the CFPB. We've been seeing recently there's been an expansion of jurisdiction. So if you think that what we're talking about up here doesn't apply to you, it probably does, and you should be mindful. Luckily, this is an audience of like-minded folks, so I'm probably not saying anything that's too scary, but it's something to be vigilant about and to definitely be careful. I think that this is going to be even more focused due to recent times with the pandemic and with the need and desire to speed things up. We're sort of in a sort of automated zone right now, and with that comes less human intervention, and that's when things can unfortunately get into the process that were never intended and sort of take on a life of their own. So I would just slow down, think about what you're doing, and set up the right policies and procedures and training so that you're not on one of these articles that's on the front page of the news.
Yes. And Nicole or Jody, do you have any thoughts on that in terms of how companies can implement these processes in a way that's really safe, both for the companies and of course, while being proactively helpful for consumers? Are there any guidelines you suggest?
So I just want to honor Robin's sentiment. It's so spot on that regardless of what fintech or what solution an FI might select, compliance rests with you, right? So that's a burden, it's a challenge. So I think that there is a growing commitment around appropriate vetting of fintech solutions, ensuring that they understand, just because you can build innovation and so many smart people around us, if you don't have the context of the domain for banking, that could be a significant challenge. So I think it's all about vendor vetting, choosing your partners wisely. I know too that there's kind of a growth in the ability to help harness data, and there is so much data, but not all of it may be required to fit the use case that you're trying to achieve. And there's also available training data. So there's data sets that you can augment your own customer data or member data and be able to really augment that and get a broader picture. Because you're right, diversity leads to better outcomes in all matters, all things. Data is no different, right? So I think that's something to be mindful of.
Jody, do you have anything to add there?
I think the only thing that I would add is that, of course, all banks and credit unions have a great deal of sensitivity, appropriately so, around data privacy, security, and those elements. And of course, we've also got a global movement around open banking, right, which is actually moving faster in some areas, such as Brazil and UK, and it's coming to the US, but it's more market-driven in the US. That'll put even more control in the hands of your customer, control in terms of who gets access to their data and also what kinds of solutions they want. So all of this creates, let's say, makes it really critical for the FI to be able to have solutions that leverage customer data but deliver real value back. Meaning actually look out for your customers. And what we've seen in our research is that customers are very willing to do a value exchange if you're going to leverage their data in a way that can really benefit them. But that is the test. That said, you still need to be ready. For instance, there's greater privacy regulatory regime, for instance, in the UK and in Europe, and we need to be ready for that here. So allowing customers simplified consent, giving them the right to be forgotten, and of course the ability to opt out. So all of those things need to be built into the solution as well, so that you're prepared as the next regulatory regime unfolds.
And Jody brings up a good point with respect to the privacy regime in the US, which is unfortunately incredibly complicated because we don't have a federal privacy legislation, and that it is a patchwork quilt of state by state laws. And I think that Nicole obviously highlighted a lot that the compliance is up to you. So, just complying with, say, California or New York or Virginia is not going to cover you if your consumers are in, North Dakota, let's say. So it's really a difficult landscape, and that's only if you're working in the US. If you move to the UK and you're dealing with GDPR, it's a whole other host of problems. So I just think that this is a very, very complicated issue and an area, and one that has a number of possible pitfalls if you're even with the best intentions that can cause issues to arise.
Yeah, and that's what I've seen quite a bit in my work is people really have good intentions and somehow it ends up not working out, or you have good opportunities and you don't pursue them because of risks. And it's very unfortunate. But thinking about the privacy and all of the news that's coming out about this, a lot of it is driven by trust and a lack of trust, because organizations have not responsibly used people's data. And so I think a lot of what we've all been talking about here has been use of data in a trustworthy way. And so I was wondering if you have anything to say about that in terms of how can we show customers that as we're doing these things and encouraging financial well-being, that it's trustworthy. We're not turning around and using that same information in an underwriting model, which is then getting them rejected. So do you have any thoughts on that? Yeah, Nicole.
There you go.
Okay, so trust and data. I mean, I think you have to get it right. I think that if we, as you shared, Nick, the competitive advantage is really based and rooted in, show me that you know me, prove that I can trust you. And community financials, they used to have that face-to-face engagement. You knew the member, customer, the family. How do you translate that value, right? That relationship and build trust in a digital, even mobile-first context? So that's a challenge. So I think at every instance of using data, it has to have a valuable outcome. It cannot be noise. So I think that is going to force a prioritization and maybe a test and learn modeling. So not opening it up to everybody, but just starting to prove and really see what works. I mean, I think every market is different, and there's going to be broad brushstrokes of lessons learned, best practices. But what plays out in your own financial institutions, customer base, member base, is going to be nuanced. So honoring for that. I think so. Iterate, test and learn approach, not overkill, and just see how your users respond and deliver something of value. And I think that the shift would be descriptive analytics is one thing. It's lower on the data maturity stage. So it's kind of like, okay, you have a NSF because you bounced a check, you didn't have funds. That's a historical look. The value is in creating the proactive. So looking ahead of what, and Jody, you hit on this earlier, is like the proactive insights, driving behavior. What are the consequences of inaction or action around this, and quantifying that, demonstrating that. So just deliver value, right? So roundabout way. So my thoughts.
And I think that sets up what was supposed to be the last question. So I'm gonna roll that one forward for Jody. What's your bold prediction? Because I think your answer really does go right with.
Bold prediction. Well, I'm going to actually say two.
Okay.
One is I think that we are compressing the pace of innovation across the industry because customers are demanding it, and it's incumbent upon the industry to really rise to that challenge. So, one bold prediction is that I believe a basic version of personalized insights and advice will be ubiquitous. It'll be offered by every single FI in the next 2 years. That means you'll either build it internally, you'll use an outside provider, or your digital banking platform provider will step up and deliver it for you. It'll still, though, be a point of a battleground for differentiation. So that's one. I think even more, let's say, provocatively, I'd say that the days of the marketing banner will soon die.
Yeah.
That is, you're saying a customer, you're pre-approved for this home equity loan or for this credit card. That will give way to something that is, we have recognized some activity, some pattern of transaction activity, and some need in your transaction data. We believe that you are better suited for this product, and this is how much you will save. And just think about how customers and members will receive that kind of invitation versus telling them that we've modeled you and we think you might like this premium credit card offer.
Yeah, and that's such an interesting opportunity, and I think it's going to draw many people in. But stepping away from the individual, what I was curious about was, what are institutions able to do with aggregated data? What kind of metrics should they be looking at when they're thinking about the financial health of their customers? And what can they do with it?
So this is a really exciting space. And as you said, you started with, Nick, we're really in the early innings of this whole category around data-driven personalization. There's so much more left to innovate and develop. So, and we're already starting to see impact. For instance, US banks in the audience, they talk about 2 billion personalized insights delivered. They received the #1 mobile ranking from Keynova. Huntington has a service called Heads Up. They received the #1 customer satisfaction from JD Power. Royal Bank of Canada talks about their automated solution, Find and Save, being their #1 savings account generator. Opened up 300,000 plus savings accounts. So those are all for that benefit the FI and the customer. But I will maybe issue a challenge here as well, which is that I believe that banks' balanced scorecard should actually take into account these wellness metrics.
Agreed.
And I'd say 3 of them are, one is, what percentage of your customers has saved 6 months of cash flow expenses, and that you can, and that's demonstrable. The second is, what portion of customers are either creditworthy or improving their credit score? One or the other. And the third is, what percentage of your customers are managing their expenses in an adequate way on a monthly basis without incurring, overdraft conditions? And I would just posit that as you think about a balanced scorecard, and you've got your financial metrics and your customer satisfaction metrics, that we start to consider these wellness metrics, because we know with metrics and accountability, more than just setting up departments, that is what drives creativity and execution.
That's great. And now we're going to go on to the lightning round very quickly. So Robin, Nicole, and Jody, many of the people that are in this audience have the power to affect change at financial institutions. So I want you to look at those members of the audience, and I want you to give them a suggestion. My experience working with financial institutions is change comes incrementally, sometimes extremely incrementally. So it can be a small thing, but what would you suggest that they take back and on Monday see if they can implement to try and improve the financial health of underserved communities?
So I might, at the risk of piling on, I'm going to call it inspiration. And Jody, your last response, I think it really is around embedding financial health in the mindset of everything that is delivered with a mobile, digital-first mindset. You mentioned those metrics, which I think are fantastic. Our FIs even asking or thinking that way, right? And it's a tough game. You're trying to drive revenue, deliver value, track CSAT, MSAT, loyalty metrics. But what about financial health? Right, and I'm not saying that broadly, people aren't thinking of it, but it's talk is one thing, action's another. So I think really about embedding that, and that is in technology and in mindset and culture as well.
Robin?
Yeah, I love that the theme of this conference is look back, lean forward, and I think what I would encourage is, to sort of bring this back to your teams, kind of as Jody says, and, sort of build consensus around next steps in terms of your products and services that you're looking to offer. I think if there were more discussions being had internally on teams about these sorts of topics, such as financial health, that it could really move the needle in a really big and meaningful way. One of the topics that's front of mind right now for me is sort of financial crime and fraud. And for consumers, if you don't make a charge, you can easily kind of call and hopefully if it's within a time frame, get your money reimbursed. But if you're somehow led to believe and you're somehow it's an unauthorized charge that you made it because you were led to believe through some phishing or scam, then you're sort of out of the money. Those types of things are things that are, fine under the law, but they're things that maybe financial institutions could take a look at and perhaps shift, the resources to make disclosures or, other marketing and advertising such that people are aware that, there are bad actors or others out there and that they should be spending and developing routines that, avoid sort of financial crime and harm that's out there and prevalent right now in this sort of technology environment.
Thank you. And so we only have 1 minute and 50 seconds, I see, for questions. So I'm going to cut it off and see if the audience has any questions. And of course, we can't see the audience, so.
Blinded by the light.
Yeah.
That's right.
Way in the back.
That's a song, isn't it?
And ask your question in the form of a limerick.
I'd prefer a haiku. No, my question is directed to the panelists about what individual states can do. I know we talk a lot about scaling and bringing solutions across a national level, but so much financial services take place at the community level, at the state level. What can state regulatory offices do? What can state chartered financial institutions do? What could the fintechs do that really focus on state issues that are very unique to those communities to collaborate and partner and develop some real solutions together around financial health and wellness.
So Robin, what can the states do?
I think that there's a lot of data out there, and I think the states are really doing a lot of good job, through their, respective, AG's offices and financial services offices to sort of identify a lot of the harm and the risk that's happening to consumers. I think taking that the next step further and sort of, putting it into a sort of financial health lens is sort of what's, I think, the next needed step. I think there's a lot of, right now at a high level, reaction to sort of top of house, big picture issues. But if we could start being more proactive, I think that in sort of designing programs that are based around, human and individual needs, I think that would, go a long way. I don't know if Jody and Nicole have any thoughts?
So I think I'll add my 2 cents there. And I'd say one of the places that I've seen a lot of good work being done at the state level is in insurance and employment law. And so I think if you can look to the state of Colorado with their insurance department's laws on algorithms, the use of algorithms, there are a lot of problems with it, but it's moving in the right direction. California is doing similar things. New York City has passed a law on employment algorithms and auditing them for bias. And so there are state level institutions that are doing what I think is a lot of very good work. And so that may be worth collaborating with those groups. But I guess we are out of time. This has been wonderful, and thank you to my panelists, and look forward to continuing the conversation.